Why cash credit facility is shown as current liability but remain for long term with year after year renewal? Yes, this is the question many will have. If you take balance sheet of a company, under current liability section, you will see cash credit, and this amount will get renewed year after year, maybe at the same level or it will increase. But the point is, it will remain in current liability. Our understanding of current liability is these are all the liabilities which are repayable within 1 year or repayable within operating cycle, right? But here this cash credit is not getting repaid at all, and it is getting renewed or increased year after year. And why do we still call it as current liability? We have two reasons for classifying the cash credit still as current liability. Number one, it is repayable on demand. Number two, there is no unconditional right with the borrower to defer the loan payment. It means it is repayable on demand. It can be renewed year after year, but the right of renewal is with the lender and not with the borrower. This is actually provided in Schedule 3 of Companies Act 2013, available in Clause 4. It says if there is no unconditional right to defer the settlement at least for 12 months after the reporting date, then the right actually exists with the banker and not with the borrower. So it is the banker who is going to decide whether the facility will be renewed or not, and it is not the borrower, and it's for that reason it will continue as current liability only. And here we go, Credit and Financial Analysis Mastery course. It's a comprehensive pre-recorded online course that comes with 15 modules of video lectures, basically 70 plus hours of video contents, multiple ebooks and reading materials related to credit and financial analysis that will make up another 30 plus hours of content. So totally it is 100 plus hours of learning resources. Then you will also get access to a private community in Telegram for clarifying your doubts in credit and financial domain. Then you also have the flexibility to choose 1 year subscription or lifetime subscription depending upon your learning goals. So by joining this course, you will learn basics of credit analysis, how to read balance sheet, financial ratio analysis, cash flow, fund flow analysis, how to arrive at credit risk rating, how to prepare CMA report, cash budget, how to assess credit facilities like CC, OD, LC, BG, term loan, how to write bank loan proposal, and you will also have access to case studies related to credit analysis. So to join this course, to know more about the course, comment CFA, and I'll share the details with you.